Hey everyone, hey, it's Brian here with Stop Being Sold. Welcome back to the channel. In today's video, I am going to show you how to calculate taxable Social Security benefits for 2023. And in this video, I am going to share with you the IRS document publication 915, which is the Social Security and Equivalent Railroad Retirement Benefits Guide. Now you see it says for 2022 returns. This is the most current one that we actually have. Late November, early December, you'll be able to download the newest one. And it's funny. Michelle and I have talked on this channel many times about taxable Social Security benefits, and where up to 85% of your benefits could actually be taxed. That's what we're going to cover today, and how that amount is actually figured out. Okay, this document will be below the video for you to follow along if you want, or pull it back and watch it later. It's totally up to you guys. Now let's get started. Down on page 3, we want to go to there first because I'm going to look at the bottom right hand corner of the page, and it's talking about your base amount. Okay. If you are single, your base amount starts at $25,000. If you file a federal tax return and your income is between $25,000 and $34,000, you may have to pay income taxes on up to 50% of your benefits. And if you make more than $34,000, up to 85% of your benefits are taxable. Now, look a little bit lower. It says for filing a joint return, the starting base amount is $32,000. So if you file a joint return and you and your spouse have combined income between $32,000 and $44,000, you'll pay income taxes on up to 50% of your Social Security benefits. If you make more than $44,000, up to 85% of your benefits may be taxable. Let's scroll down to Worksheet A, which is the top of page 4. In this section here, this is a quick way that your benefits can be taxable, and you can figure it out. Do I owe taxes or do I not owe taxes? Okay, and how you fill that out is, let's use their example that they got. Let's say for filing a joint return, both of you receive Social Security benefits for the year, and you'll enter that in section A. So you're combined between you and your spouse. This couple had a combined of $6,000. You take in line B and multiply that by 50%, that's $3,000. Now, enter your total income that is taxable income for the year. That includes your pensions, your wages, interest, ordinary dividends, and even capital gain distributions. Don't reduce it by any deductions or exemptions or anything like that right now. This is just your base gross income for the year. $28,800 is what this couple had. We add it to the $3,000, which is half of their Social Security benefits right here. That comes at $31,800. If we go back to page 3, remember the base amount for a married filing joint was $32,000. So this couple is below that. If none of your if the amount on line E equals or is less than the base amount for your filing status, none of your benefits are taxable for this year. This is how I do my financial planning. I try to get you the most income possible each year on an annual basis by taking out from this account here, from your Roth IRAs, from your IRAs, from your pensions, whatever it may be, and your Social Security income to get that number below these base amounts so we don't create a taxable event on your Social Security income. Sometimes, though, you make too much and you're going to bypass that anyways. But this is just a quick way to do this. If you're single, do the exact same thing. The amount up top, half of that amount of your Social Security benefits, your gross income for the year, add them all up. If it's below the $25,000, you're not going to pay taxes on any of them benefits. Okay? Now, let's go down to the next section, because now you got to figure out if you do have, let's say you go over that amount and you have some is taxable. How do you report the benefits on your 1040 form? That is going to go on what's called Worksheet 1. And on Worksheet 1, which is page 7 of this document, there's also one in your 1040 form also, where you could download that single form from the IRS website on an annual basis. And let's look at, we're going to give you 2 different examples. One is single and one as a married filing joint. The first example here is George is single, files his 1040 for the year, In addition to receive Social Security payments, he also had a taxable pension of $18,600 and wages from his part-time job of $9,400 and taxable interest income of $990. All that gets added up to $28,990. He had received on line one $5,980 in Social Security benefits. Remember, on line two, or B, in the example we used up above, you take 50% of that amount and add it here. So that's 50% of his $5,980 is $2,990. We add that to his total gross income. Now he's at $31,980. But real quickly, he's over the $25,000 limit because he's single, right? So we subtract that from the amount above, and now we have $6,980 on this amount here. Okay, they're going to have you put in your deductions, and we're going to go down and look real quick as you fill this out. Just follow these lines, enter the amounts from the lines above, multiply that times 50%, enter the smaller of the two. It's real simple. You get down to your taxable benefits is 1/2 of your benefits because he went too high as far as his income. So $2,990. This now goes on to your tax form 1040, where it says 6A says Social Security benefits that you received, and then 6B says your taxable benefits. So this amount right here, $2,990 would now be taxable for the year, and it will now be added to your other income up here of $31,980. So let's scroll down and let's look at example 2. Very similar situation, except for a married couple. Okay, with this one here, their total Social Security benefits was $5,600. Half of that amount was $2,800. Their gross income combined was $29,750, and it came down to a total of $32,550. They had a Schedule 1 form here that they was able to subtract off that $1,000, brings it down to the $31,500, which is under married filing joint base amount of $32,000. Okay, that means none of this is taxable, and they can move forward from there. So as we finish out this video, you want to use this guide each year. Let me scroll back to the top, publication 915. It's at the bottom of the page. Go to page 3, look at your base amount for each year, because that does change on an annual basis, and then use section 4. Page 4 was the quick fact sheet benefit worksheet A, and you can quickly calculate if you owe these taxes on your Social Security benefits. This is how I do it on an annual basis for a lot of our clients today. I hope this video helps you. Again, down below is the document for you to download, and just keep that handy. Spend some time reading through, especially the first 8 to 10 pages of this, because you'll get a real good understanding of what is taxable and what is not taxable as you receive your Social Security benefits on an annual basis. Hope you enjoyed the video. Leave me some comments below. Stay tuned to this channel.